Hello everyone, welcome to the Ichimoku charts.com daily analysis for the SP 500 for Wednesday, January the 20th, 2010. Well, a red body candle today, and the body of this candle is completely within the body of the previous candle. This is telling us that the sellers have made net bearish progress on the day, and very much the opposite to the previous day. So it does raise some doubt about the possibility of the market breaking out to the upside above this 1150 region of resistance that we identified over the previous few days. Having said that, though, the bears have actually lost commitment throughout the trading day. They tried to trade the market down below this 1133 region of support. They took the market just down below there, but the buyers came back in and brought the market back up to close the market at the midpoint level. And closing at the midpoint level means that neither the bulls nor the bears close this market in control. Having said that, the bulls certainly don't seem to be committed to taking this market higher, but the bears certainly did lose commitment through the day. So we're now trading within this range again. What's interesting is that we actually have the market making higher highs within the range and now starting to make lower lows. So there's a very strong battle going on between the bulls and the bears, and the volatility is beginning to increase. This is very similar to a megaphone pattern where we have higher highs but lower lows within the pattern, and quite often they signal a top in the market, so there is potential for this market to come off. Having said that, though, the only confirmation that we have is a breakout to the upside or the downside. So there is still potential for this market to break out to the upside. Just looking at the support here, every time the market's traded down below 1133, the buyers have come in and brought the market back up, and we can see the shadows on the bottom of the candles here have represented that buying coming in. So there's probably more support down around the 1133 region, and there probably is up around this 1150 region. Now, the market is trading up above the cloud or the Kumo, which means that it has an overall positive bias, so it would be more likely that the breakout would be to the upside when that breakout does come, and there is potential for the market to trade up to this 1163 region of resistance that we identified previously. The market is trading up above the Kijun-sen, which means that in the medium-term time frame the market is bullish, and is just trading down below the Tenkan-sen, which means that in the fast time frame the market is bearish, but the market's been oscillating above and below the Tenkan-sen within that short time frame. It means that the market is rather indecisive. It's trying to find equilibrium within that time frame. So all we need to do is be patient, wait for the market to break out above this 1150 area potentially for a trade up to 1163, or potentially break out down below the 1133 and have a solid close down below, with a bearish close down below the 1133 region, for the market to potentially find support around this 1122 where the Kijun-sen is, which coincides with the top of this rectangle pattern that we identified previously. There's also strong support at 1106 and down to the top of the cloud around the 1095 area.